Let's bring in Managing Director of the Brantley Risk and Insurance Center at Appalachian State University, Dr. David Marlett. Dr. Marlett, good morning. And one question I have for you. One analyst actually estimates the LA wildfires will cost insurers at least $20 billion. Will this cause more insurers to pull back from doing business, not just in California, but in other states?
Yeah, it's going to continue the trend towards insurers raising their rates and also decreasing the coverage they provide and continuing to pull back. $20 billion in the grand scheme of things globally is not going to be like a very significant, very extremely significant event, but certainly in certain parts of the country, it's going to cause insurers to rethink their exposure.
Needless to say, Dr. Marlett, right now everyone sees insurance companies as the bad guy. You're not surprised at the way this is playing out.
No, and unfortunately, it's the financially responsible move for them to be reducing their exposure. Otherwise, if you continue to lose money, you won't be able to pay any claims eventually.
And the idea behind that is they are a for-profit company, right, Dr. Marlett?
Yeah, most of them are for-profit, but you do have some that are mutual companies, which are not necessarily for-profit, but still they have to earn profits to pay claims in the future.
And Dr. Marlett, when one files a claim, what does insurance normally cover for homeowners who have lost everything, like we're seeing many there in the Palisades? And what options are there for folks who had no coverage?
Yeah, that's a great question because it does vary by peril. And I live in western North Carolina, and we had a Hurricane Helene come through, and most of those claims were not covered by insurance because of flood. This case will be a little more straightforward because fire is consistently covered. And so from that standpoint, as long as they can document their losses, it should be a fairly straightforward claim.
Dr. Marlett, could you go back to that again? Because I was just having this conversation with one of my producers, how Hurricane Helene, this event came through, but because it was actually flood damage and not storm damage. Can you break that down for us?
Yeah, if you look at the major perils, hurricane, flood, wildfires, and earthquake, they're not all covered under the standard form. Earthquakes are not and floods are not. So that makes it very difficult for the consumer to really understand what coverages are supposed to get and how much they should purchase. That's why it's really important to have a good agent, and they can help you with this process as well.
Since you work in this space and you are an expert in this particular area, Dr. Marlett, my question is this. How much are natural disasters upending the insurance industry, and what is the solution?
Yeah, it's certainly been a very rough 3 to 5 years. And they've been through these cycles before, but the last most recent years have been particularly challenging because we've not only had an increase in the frequency and severity of disasters, a warming planet, we've also had significant inflation. And that means it's cost more to repair the damage. And plus, we have population migration where people are moving to the high-risk areas. As far as solutions, I mean, we're going to continue to see the trend of higher premiums and reducing coverages, but there really needs to be a greater public-private partnership and probably some intervention on the federal level.
Thanks for watching, everybody. Go to joinnn.com to find NewsNation on your television provider. Also, don't forget to click that red subscribe button below to get more of NewsNation's fact-driven, unbiased coverage.